Hello, welcome everybody to the Property Master webinar. Lovely to see so many of you back with us on the line today. This is a special webinar. We're going to be focusing on a subject that we've seen a lot of interest in lately, both from clients and on social media and on traditional media. It's a subject of holiday lets and investing in holiday lets. So I'm absolutely delighted to have with us this morning a specialist in the area, Caroline Shard, who is the Business Development Manager for the Vernon Building Society. And holiday lets is one of the areas that the Vernon is particularly interested in. So welcome, Caroline. Lovely to have you with us today. Tell us a little bit about the Vernon.
Morning, hi, nice to meet you all. So my name's Caroline. I'm from the Vernon Building Society. So we're a small mutual building society in Stockport in Greater Manchester. We've been going for, well, since 1924, so we're coming up to nearly 100 years shortly. So a lot of experience in the mortgage market, shall we say. But yeah, so one of our main kind of USPs is holiday lets, but we can also look at standard buy-to-lets, regulated buy-to-lets. We look at portfolio landlords, multi-unit blocks. So yeah, we've got a vast variety of different options that you can come to us and look at for any kind of investments that you're looking at.
Fantastic, that's brilliant. I see we've already got questions. That's probably the quickest we've ever seen questions coming up from Paul there. So that's fantastic. Yeah, so if you have a question, please put it in the chat box as Paul has done, or there's an ask a question button at the bottom as well, and I'll monitor both of those. So we'll come back to you, Paul, but I just want to also say hi to Angus, as ever, Angus Stewart, our Chief Executive. He's just going to give a brief overview of the buy-to-let mortgage market for you all, particularly tomorrow. The Bank of England meets again. Are we going to see a rate rise? Certainly the market, I think, seems to think so. So Angus, just kick us off with a few minutes of what's happening in the market generally.
Well, good morning, Chris, Caroline, and everybody. Well, we've been doing these webinars for 2 years now, and when we started 2 years ago, beginning of COVID, I think we all thought that property was going to fall in value. We didn't really understand what was going to happen in a post-COVID environment. But in these last 2 years, we've seen prices grow by about 21%. So staggering rate of growth in house prices. And in the rental market, we're seeing a huge mismatch between supply and demand. And that's driving rents up. And that's driving rents up at a time when everybody is actually facing increased costs with electricity and food and all the other challenges that are coming as a result, partially through the Ukraine invasion and partially through some of the other inflationary challenges we know we're facing. So really difficult. Rightmove showing stronger growth in rental demands and rents. So very competitive market for tenants. Rents outside London have hit an all-time high of 1,088 per month on average. Average rental growth 11%. So it's first time year on year asking rents outside the capital has surpassed the 10% mark. So again, lots of pressure there. Rental demand up by about 6%, and available rental properties is about half of that. About half, so about 50%. So very, very difficult. We've got some great areas in the UK where there's been substantial growth. The northwest Manchester, Liverpool area, sort of Caroline's area, has seen sort of huge hikes in rent, and very big hotspots for us. I mean, Manchester has seen rents go up 19.3% and Liverpool 17.1%. So lots of pressure there. But the main, 7 of the 10 hotspots for rental demand are the northwest at the moment. In terms of mortgage rates, well, we've had 3 rate rises in the last few months, and as Chris has just said, we're expecting another one tomorrow. So, so rates are moving and moved up. For a typical £160,000 loan at a 60% LTV, rates have moved 2.06% to 2.36%. That's about £40 a month increase. 5-year mortgages also gone up about 2.23 to 2.48, so slightly lower, but across the market. But again, considerable increase. And what does that mean? We are going to get continued interest rate increases. We're expecting a 0.25% tomorrow. That is not going to be the end of it for this year, certainly. It's putting challenges on lenders, it's putting challenges on brokers like ourselves, and it's putting challenges on borrowers. We're finding that many lenders will pull rates and products with almost no notice. There are lenders out there who have pulled out of the market completely at no notice. And that means that as a borrower, you need to move quickly, you need to actually get your applications in, and you need to get to the point where you've got an offer for you to be certain that you can actually get the rate that you're desiring. And I'd encourage everybody to look at their portfolio, to understand what products rates are going to expire over the next few months, and move quickly if you want to try and capture some of the lower rates that are still around at the moment. But no promises. We're finding things, what we think is available today might have disappeared by close of play tomorrow, and we have disappointed customers when they realise they've not moved as fast as they should have done and could have done to actually capture rates. So with that sort of backdrop I think general concern about rising cost, I'm concerned, to be perfectly honest, about tenants and their ability to pay not only the increased rates, but also the increased costs for electricity and food. I think we're going to get situations where we've got tenants who are struggling over the next year or two, and that's going to behold landlords to look compassionately as best they can, just as they did during COVID, in terms of how they can look after their tenants. But we're here to talk about holiday lets. Wouldn't it be great to have a holiday? I could feel like a holiday. And so over to Chris and Caroline, and let's see what we can tell you about holiday lets.
Great, thank you for that, Angus. Interesting stuff. Well, Caroline, just to sort of start, really, at the beginning, I said there's been an upsurge of interest in holiday lets, certainly over the last few years. Why do you think that has been? What's been fueling that interest?
So personally, from what we've seen, so we've done holiday lets for quite a long time, and it's always been a steady flow as business. I think COVID definitely had an impact. So you had, obviously, people couldn't travel abroad, so that ultimately puts the holiday market up there. That in then turn gives people the idea of, well, why not invest in a holiday let? And the media has a lot to do with it as well. So, a few years back when COVID was on there, it was showing you on the news about people, being gazumped doing their holiday lets, people trying to get, a holiday away. So it was a bit of a mad market. It has stabilised a little bit, but again, it's such a good investment. Better rental yields, the ability to be able to stay in it yourself as well. So, you're kind of killing two birds with one stone there. But again, I think it's given people the idea of, you will go abroad when you can. Obviously, all that's opening up, but it's given people the idea of actually you don't need to go abroad to go on a nice holiday, and I think that will just ever grow. So yeah, it's definitely a good market to be in at the moment, I think.
That's interesting. It's almost like we've rediscovered our own country once we were forced to stay in it, as it were. So that's interesting stuff.
Yeah.
Well, it's a question here from Paul. Actually, Paul, you may be thinking about doing this. Paul is saying, if I move from buy-to-let to holiday let, what costs am I likely to incur? And can I move from buy-to-let to holiday let with my lender? What's your take on that, Caroline?
So the first part of the question, so yeah, there are additional costs that you would probably need to consider. So when you've got a standard buy-to-let mortgage, your tenant generally pays for the council tax, the utility costs, that kind of stuff, and the general upkeep of the property. So you do need to kind of take in mind that, you will have regular cleaning costs, your service charges will be more. So if you're going to go through somebody such as, Sykes or Cottages or an established holiday letting agent, they will charge you higher service fees, purely because they're advertising the property for you at all times. So you do get more service, but you do need to bear that in mind. You're generally paying the utility costs, your cleaning costs every week. So every changeover, you'll have to have that then cleaned. So it's just general costs that you need to bear in mind that you will actually pay, but then the income that you will receive should be more than what you would get on a standard buy-to-let anyway. So it does still work out better, but it's always best to just keep in mind that your costs will be higher. And then probably with that as well, just the maintenance of the property. So obviously you've got a number of different people coming in. Not everybody is, susceptible that it is somebody else's property. So there will be more wear and tear than what you would generally find on a standard buy-to-let. In regards to the second part of the question, so you would be able to change it, but however, you'd probably need to speak to your lender because you will be on a buy-to-let mortgage contract. So there will be different clauses in a contract for a holiday buy-to-let. So it might be a case of they will let you change it, but it might have to go on a different product, so you could incur early repayment charges. But I would suggest that you speak to your lender and see whether the option is available or how they would work doing that. But it is something that you can look at. It may just be that you need to wait until your current mortgage product is up for renewal and then look to change it at that point.
Interesting.
Yeah, I'd just add, if I can, some lenders don't want to do holiday lets. So depending who your lender is at the moment, Paul, you may not be able to switch into a holiday let. The Vernon clearly would let you, but others aren't that keen. If you talk to come to Property Master, we can help you and advise whether or not your current lender is willing to do that, and any implications of that. The other thing I would just add is that Caroline mentioned that if you're doing holiday lets, you'll pick up council tax costs. Certainly some areas of the country now are penalising people who've got multiple properties, and therefore you may find you've got higher council tax. Certainly there are parts of Wales which fall into that. And the other thing to think about is that in certain situations you can position yourself as a small business, and you may be able to get small business rates relief on that holiday let. So there is no council tax to pay, but then you may have to pay for other things like rubbish with removal, which wouldn't be available to businesses normally have to pay for waste disposal. So there are some pros and cons. You need to look at it and look in the round at what the total costs are, and you need to understand what the rules are if you're going to move it and position it as a small business in terms of how often you can stay there and how much it's available for rental.
Yes, yeah, all good points. In fact, I'm just putting there in the chat box a link to our blog on the subject of holiday lets, because it does have the numbers there in terms of how many days let the property needs to be to qualify for council tax relief, well, to qualify for business rates in actual fact, and also to qualify as a furnished let with regards to HMRC. So you can head on over there afterwards and have a look at the details there. But it's interesting the point you make, Angus, not all lenders do holiday lets, so that's worth bearing in mind as well. You can't assume that your existing lender does that. Caroline, tell us a little bit about you at the Vernon. I know obviously you can only speak for the Vernon, but when you get a customer approaching you, perhaps through a broker or whatever, about a holiday let, what do you look for? What convinces you that this is a good investment for the client?
Yeah, so there's probably four main key areas for us when we're looking at a holiday let. So the first one is the property itself. What does it look like? What kind of construction is it? The next would be the location. So is it in a holiday letting area? If it was in the middle of a city centre somewhere, it's probably not what we would deem as a holiday let. But you've got different holiday lets in different areas. You could have coastal, you've got rural. We can look at certain kind of town centres. So Bath is a good a good example where, you know, people do go on holiday to those kind of places. So it's the general location. As a company, we look at what letting agents are already there at the moment. So what kind of holiday lets are there? Is there a demand in the area already? We then look at the clients themselves, so who they are, what kind of employment, what income they've got, and then ultimately the potential rental income. So the key to it is always, is it affordable? Is it affordable on the stress rate? Is it a good option? Is it a viable option for the client to do? Obviously, if you're not making any money on it, why are you going to put yourself forward for that? So they're the four main kind of areas that we focus around. It is assessed very much like a buy-to-let. So, you know, you're looking at the income, you're looking at the property, you're looking at the clients. That's exactly how we would look at any kind of mortgage, whether that's residential or, you know, a standard buy-to-let. Income-wise, so again, this is probably more how the Vernon works. So it's not necessarily across the whole market, but for a holiday let, we assess it as a holiday let. So we will work off a high, medium and low season rate, and then what occupancy rate that's over. So that's where your rental yields come in. Obviously, that should be more than what a standard buy-to-let would do. Some lenders do look at it on an AST basis, whether it's a holiday let or not. But as I say, we don't work like that at the Vernon. So what we generally require is a letting agent to confirm what the high, medium and low season rate is, what occupancy rate that's over, and then we'll work the affordability based on that.
So that would be up to the client, Caroline, to find a letting agency who could verify, you know, the details and the facts of what you as a lender can expect that property to yield. Excellent.
Absolutely, yeah. I mean, there's many different letting agents. You've got, you know, the big agents such as Sykes, Cottages, but then you've got smaller ones that are specific to that area. So Wales, they have a lot of different holiday lets that holiday letting agents who, you know, they literally focus on that area, so they know very well what locations will bring in what kind of income. So it's always worth getting a few different quotes from holiday letting agents just to get a good idea, as anything in life, you know, 2 or 3 different quotes just to get a good idea of what income they're going to be generating on that.
That's really useful. Angus, how does that compare to other lenders that you deal with in the market? It's quite a comprehensive explanation there from Caroline as to how it works.
I think it's reasonably comparable in terms of how lenders like to look at property. I mean, you know, some will, as Caroline said, look at it as on an AST buy-to-let basis, i.e. the backup. And you know, if it doesn't rent as a holiday let, could you rent it as a tenancy, and would it cover its costs that way? Because as we've already talked about, you know, you generally get higher revenues from holiday lets. So the lower risk would be the AST element of it. I think some lenders are a little concerned if the property's never been let before, and you know, if it's a first-time holiday let, certainly for a first-time landlord, they're a little more cautious because they want to know that the property can be let easily, and they'll take different views. So a lot of this comes back to the lender's policy themselves and the underwriters looking at it. And as Caroline said, you know, different areas. I mean, you know, Bath is a nice city and does attract tourists, and you could see a holiday let working there. But you know, you might find there are some cities in the UK which wouldn't normally appeal as a holiday let, and therefore why would you be looking to put a holiday let property in those locations? So you've got to be able to justify why you're doing something and whether it's realistic, to be perfectly honest.
And do holiday let mortgages tend to be more expensive than standard buy to let, or does it vary?
Yeah, generally they're a bit higher in terms of interest cost, and that reflects the slightly higher risk that lenders generally perceive in terms of having void periods there.
Caroline, you mentioned a few issues there. Perhaps just sort of come back about the client themselves. Would you need to be a homeowner already in your own right to be considered for a holiday let?
So again, it is lender dependent. So every lender will have their own criteria and what they're comfortable with risk wise. For ourselves, we don't need them to be a homeowner. We need to then kind of understand where do they live, what are they doing, and we just need to be satisfied that it isn't, a backdoor residential in any kind of way. So that's kind of the key for us. So we've had a lot of people where, they're either renting or they might live with family. They might be in, work accommodation, but they want to invest. So for us, it's the whole case. How does it look? Is there a potential that they will be living in it? And as long as we can be satisfied, then no, we're quite happy to look at that. But as I say, all lenders are very different. So it's always worth, as Angus has said, to go through yourselves to kind of understand whose criteria will fit into what they're looking to do.
That's quite interesting, because I was just thinking about people who might think of it as a business proposition, as you say, living with family or renting themselves, and think, actually, I could do this and it would be a business as well as an investment in the property market. So that's actually a really interesting take. What about minimum income, Caroline? Is it the same? It varies from lender to lender?
Absolutely, yeah. So again, for us, we don't have a minimum income level. What we kind of look at is what the client has. So they need some kind of income. So whether that's a regular, monthly income, or whether that's investment income or savings that they've got in the background that they can get to and utilize. So what we need to cover is, so there's three different kind of points that we want to satisfy. So the first point is that they're not reliant on the rental income that they're going to receive from the holiday let. The second is that they've got enough income or funds to cover their own commitments. So if they've got a residential mortgage or loans, credit cards, that they have their own income that covers that. And then thirdly, that they've got income to cover any rental voids. So obviously COVID had shown us a lot, especially with holiday lets, that they had long spells of rental voids when COVID hit, and nobody knew that would ever, I don't think anybody thought that could happen. So they need to ensure that, if they've not got regular income, that's fine. We can still look at it, but we need to make sure that if there are periods of voids, that it will be covered. But as I say, all lenders are very different. So some of them do have minimum income levels. Some of them work like us. So again, it can depend on the lender.
Yeah, absolutely. And Angus, I think we've seen a sort of trend to some extent, well, certainly in recent months, of moving away from minimum income requirements generally for buy-to-let. Are we still seeing that?
Yeah, I mean, I think many lenders, had an arbitrary minimum income of 25 or 30,000, and they've recognised that is meaning they can't get to certain parts of the market where people, for whatever reason, have other assets, but they're minimising their minimize their income at the moment. I mean, I can think of people who recently retired or recently sold a business. They don't need an income, they don't have an income, and that's actually just takes them out of the market, even though they may have very substantial assets. So we are seeing a slight change in some of the lenders' criteria, but that doesn't mean that they're not looking at income and assets as part of their underwriting, because they need to understand, can you as a borrower cope in situations where there is a void on that property? And as Caroline said, during COVID, there was very substantial voids. And I don't think that there were many people, I've not heard of many situations where there were significant issues in the holiday let space. I don't know, Caroline, if Vernon, suffered badly with people not being able to cover those voids during COVID, but I've not heard of anything
not
substantial.
Really.
Yeah.
Oh, that's good. That's good to hear.
I think the main issue is around the size of holiday lets as well. So that was an issue during COVID. Obviously, you could go away with your family, your unit as such. So the bigger holiday lets, the big houses where you get a few different parts of family together, they were the ones that kind of struggled. But most lenders were very sympathetic to that, and we were there to kind of help them through that difficult period. But yeah, that's why we make sure that they've got income in the background, or they've got savings in the background, so we know that potentially they should be able to, you know, cover any of those void points. So it wasn't a big issue at all.
Interesting. There's a couple of questions here in the question box. From Carol. Carol, I don't know what your view is on this. How much work does it entail on a daily basis to run a holiday let? You've mentioned some of the things that are involved in terms of maintenance, wear and tear, and so on. So, you know, what's it actually like to run a holiday let? How much work is involved?
So I don't know personally, but what I would say is it depends on how you want to run your holiday lets. So if you're using a holiday letting agent, that's why you're paying more service charges, because they will do the advertising, they will arrange, you know, a cleaner that will come to the property, they'll organise bookings, you know, making sure that people are in or out at the right time. So they kind of take all of the stress away. You will get other people who want to manage the holiday let themselves. You know, and that can be done easily. It's just, you know, maybe if you've got a full-time job yourself, it's maybe not one. What we do tend to say as well is, you know, if you're a first-time holiday let landlord, sometimes it's better to go through a letting agent first of all, just until, you know, the property's found its feet and you've got regular bookings. And at that point, after a few years, and you've got experience of that, you can then take it over. I mean, you get a lot of clients where, you know, they live in city centres but want to buy, you know, in a coastal region. So it might be impossible for you to run the holiday let yourself. So there is a lot, I suppose there is a little bit more work to it than a standard buy-to-let, because you know you've got to have cleaners going in, you've got to make sure that, you know, the property is desirable and things like that. But a letting agent would take a lot of that stress away.
It's quite interesting actually, because you know, landlords generally in buy-to-let think, shall I run it myself? Shall I use a letting agency? But exactly as you said, a lot of landlords' portfolios begin with their hometown, so at least they live locally. That's not usually the case with a holiday let, is it? You tend to invest somewhere where people want to go away. So I don't know, Angus, we do see this, don't we, generally with landlords thinking, should I use an agent? Should I do it myself? What are you hearing from clients at the moment?
Well, I think you need to give some thought to what your cost base is and what you're trying to achieve. And, you know, as you rightly say, buy-to-lets, often people will be able to service them locally, but it's a periodic servicing. You know, you've got a tenant in there long term, and you may need to do a bit of plumbing or some other thing which comes up from time to time. Holiday lets are fundamentally different. You have got people moving in every other week or every week or even just over a weekend. You need to be able to be on site to handle those transfers and be available when the customer wants to turn up to collect the keys. Yeah, so as Caroline says, you know, it's probably much better to understand how much work that is and what's required by using a letting agent, somebody local who is experienced, who's got resources available to them to meet customers at the right time, to make sure that the cleaning of the place is done properly. Because if you can get a good reputation for your holiday let, you're going to get you know, good repeat business, and, you know, potentially be able to charge slightly higher rents on it. So I think, you know, holiday lets is one where customer service is going to be key. And if the best way of doing that, if you're not local, if you've got a job, if you've got other constraints on you, you probably want to using a letting agent so that you can keep that level of customer service up. Yeah,
no, absolutely. There's a question here from Kareem, which I'm going to put to Caroline, because I'm assuming, Kareem, you're talking about trading as a holiday let. So Kareem is saying here, if I've traded for a year, will I then be in a better position to remortgage? I don't know if that makes sense.
So it depends on how the trading. So it shouldn't really make a difference if you're using a letting agent. If you're using, so if you've set it up and you're running it by Airbnb, Booking.com, on Facebook, any kind of different sources that way, Most lenders don't generally like that on a purchase. So yes, that would definitely help. So if we can evidence of what income you've generated over a year, 2 years, it definitely gives the lender more, they're a lot more comfortable around it's a proven track record than just relying on a holiday letting agent. It's not a necessity, so it shouldn't be a massive constraint for you to remortgage. But as I say, if you are working it as an Airbnb or a booking.com, it's definitely something that you will need at least 1 year, 2 year. And then for ourselves, when we have those, we look at your booking lists that you've received from Airbnb. So you can go through your yearly booking statements and we can work off that. So you don't necessarily have to have accounts as such. We just need to understand what income's been generated, what service charges you've been charged, and then we'll work off that basis. Mm-hmm. Again, every lender is different, so that's where yourselves will come in and you can kind of navigate through the lenders when you're remortgaging on that basis. But generally, that's how it would tend to work. So as any kind of mortgage, if you've got a track record, it always makes the lender feel a little bit more comfortable that we can see that it's working and you're doing a good job basically.
Excellent. Carol, you mentioned Airbnb there. I mean, with the Vernon, you will accept Airbnb if that was where I chose to list my holiday let. Is that okay?
Yeah, so we will only accept Airbnb if it's a remortgage. So as I say, with the issue around Airbnb and booking.com and those kind of companies, you will get good bookings from there. They generally work on a daily basis. So that's where we struggle. Airbnb wouldn't provide you with a holiday letting agent's letter. So we just can't evidence what kind of income will be generated. So we can on a remortgage, because hopefully you would have a year or 2 years evidence of what income has been generated. But if it is a purchase, it would have to be done through a letting agent. But again, all different lenders they ask for different things. So some don't mind doing Airbnbs, some won't do them at all, whether it's on a remortgage or a purchase. So it's just understanding what the lender's kind of risk appetite would be around that.
That's really interesting, because you've just explained what I've read about this, about different lenders taking a different tack on Airbnb, and I never really understood why. But so what you're saying is the more established letting agencies will give you some kind of an assessment that you can show to your lender as to what they think that property will generate, but you can't really get that from the online platforms. Is that how it works?
Absolutely. Yeah. There's just they won't evidence that, which again is, you don't have the service, you don't have the level of service charges through Airbnb and booking.com than you would do through a sites or cottages, because they don't have the administration staff there. They don't put their names down to it. It's very much a self-employed business, and you run it as you want to. Whereas with a holiday letting agent, they do have a bit more input around the income, and they help you and they guide you through the process for the first few years and get your bookings up to where they need to be.
That's interesting. So Karima, I hope that helps you. I mean, it sounds as if you have been trading, so you have proof of income, and as Caroline says, that will go towards when you apply for a remortgage. Carol's just come back as well. Carol's asking about how much work involved in a holiday let. She's actually got 2 holiday lets. Both times I've used an agency to market, organise cleaning, cover, etc., and bring in expert services when needed. So thanks for that, Carol. If any of you are newbies to holiday lets, Carol isn't, and she's certainly found that using an agency has helped her. Something else you mentioned, Caroline, about different types of construction, because you find, don't you, particularly by the coast, houses are built differently. They may not be traditional types of houses. Can you give our listeners some advice on generally areas that might not be good in terms of types of construction where you might have a problem if you wanted to buy it as a holiday let?
Yeah, so for ourselves, Yeah, definitely. So normally for us, timber framed, full 100% timber properties, so wooden lodges are a no normally across the board. There will be some specialised lenders that will, but generally, the main market wouldn't go near those. Property with restrictions on there, so you generally find apartments, seaside apartments, that kind of thing, where they might have restrictions on either they can't be as a residential, or you can only live in them for so many months of the year. The main thing that you need to kind of look at around that is, for us as a lender, we need to know that if we have to repossess that property, it could be sold on the open market as a residential. That's probably the best way to kind of look when you're looking at a property. Would it be able to be sold as a residential property? So things like wooden lodges, not caravans as such, but in a holiday park, you can't resell them on as a residential, and that's where a lender will then kind of back out from there. But yeah, most constructions, all lenders look at different things, so we are very open around different construction types. Potentially multi-unit blocks where you might have a few, multiple holiday lets in there. So there's always different options, but the main way to look at it, as I say, is can it be resold as a main property? And if it's a no, then it's probably a no from most lenders.
That's really interesting. So it's almost like having that backstop, Caroline, isn't it, as a lender, that, well, if it didn't work as a holiday let, we know we could always, use it, or it could be used as a residential.
Definitely.
Angus, what do you see? Is that sort of fit in, Angus, with your experience of lenders?
Absolutely, but you'd be amazed how many people fall in love with a property and don't ask the questions about whether you have the right to sell it separately, or are there any constraints in the lease on that property. And they want to buy the thing, or sometimes they've bought it for cash and they're looking to remortgage it, and then they find they can't mortgage it because of the restrictions in the lease. So I would advise anybody buying a property to understand what the challenges might be downstream. And as Caroline says, the key thing for any lender is, can we sell this on the open market? And if there's a constraint stopping you selling it on the open market in whatever guise, you might want to step away from it and say, this isn't the property for me. And don't be tempted to buy it for cash and then try and remortgage it later, because if that constraint is still there in the lease, then you're not going to be able to do it.
It's interesting. So it's a head rather than heart sort of issue, and I think people do fall in love with holiday properties, don't they?
Well, I think anything with property, make sure your head rules your heart, because otherwise you will get caught out.
Yeah. There's a question here from James, Caroline, about holiday let agencies. Do these holiday let agencies typically want to visit the property in order to provide the letter, or are they usually able to do this via the property particulars on the internet? So how do agencies work? Do they need to go and see your property, or do they have other ways of working it out for the lender?
To be honest, James, I don't actually know the answer to that. I would assume that they potentially would go and want to see the property. But I would assume as well, maybe it depends on different letting agents. So maybe a bigger letting agent such as Sykes, potentially they don't need to come. That, like you say, they'll look at the particulars and work off other variables in the area. Whereas I would probably say a smaller letting agent would probably want to go and have a look around. But as I say, I'm not 100% sure, if I'm honest.
It's probably going to vary. I mean, there may be some smaller agencies who know the area really well, may even know the property if it's been owned previously. So it is really going to vary, I think, James. I mean, if you're looking at buying something, obviously it's something to check out and see how much you can find out about it. It's do your homework. It's always the same with property, isn't it, Angus? You've got to do your homework.
Absolutely. So. And I think we need to recognise there may be a separate valuation on the property as opposed to this lettings letter which Caroline's talking about. So there may be an additional cost in there somewhere.
And just thinking also, Caroline, about different places. I mean, where are you seeing clients wanting to buy holiday lets at the moment? Cities or coasts or rural? I mean, what's the sort of type of property? And then if you can give us any insights into geography, that would be wonderful.
Yeah, so there's a bit of everything. So we see all sorts of properties in all sorts of different locations. I would probably say at the moment you're looking at the coastal regions, southwest, so Cornwall, around that area, Northumberland, that tends to be quite a good area around there. And then you're looking at more rural areas, so the Lake District, Cumbria. Wales is another one where, you know, the rental yields aren't as high as other areas, but, you know, the property prices are much lower as well. So it all kind of works in turn. But yeah, we get all sorts from everywhere, and that's part of our role, is to look at an area and go, it's not really what we deem as a holiday let, and then look into, are there any other holiday lets in that area? But, you know, the Cotswolds, all around that area, there's just such a big demand, and it's, as I say, it's not just coastal areas. You know, there's rural areas, potential cities, you know, Bath, York as well. That's another one that we tend to get quite a few of. So yeah, it is a vast different kind of location and different kind of properties all the time.
And I guess also, you know, it's worth thinking about what else there is around the property for people to do. You know, people like activities, but different sorts of activities, as you sort of said. You know, they might want to visit a city, or they might want to get out on the water. So, you know, is it worth, when you're, you know, if you're a client, you're sort of telling the lender of all these other things that there are to do you sort of look at the whole package of that property and what's going on around it as well?
Yeah, I mean, yeah, and there's definitely things that you need to kind of consider as well. So when we're saying coastal areas, always think of how close to the coast are you. So flood risks, that kind of stuff, they're the kind of things that a lender will also pick up on. So it's lovely to have a property by the sea, but if it's not going to be there in 20 years' time, they're the kind of issues that we're looking for. You know, dependent on lenders, depends on what they like to have around the property. So for us, we don't particularly like having, you know, pubs or restaurants in the close vicinity, so either next door or adjacent to. But then really for a holiday let, you want, you know, that's the kind of key things that you want. If you're in the countryside, you want, you know, a shop, a pub, a few restaurants, that kind of thing. So yeah, it is always worth giving us the picture. That there's never, the more information you can give a lender, the better, just so they can be more, they can make the decision up front, and then as the mortgage process goes on, there's less chance of there being any kind of hiccups within that as well, I'd say.
No, that's really interesting. And I'm just sort of thinking about, you know, the property itself. You know, are there particular things that, you know, make a property stand out as a holiday let? So particular things that us holidaymakers want. Have you noticed any trends there?
No, I mean, parking's probably one for us. So when we look at a holiday let, again, because you've got to look at it as a residential, if anything went wrong, is the parking. So, you know, if it's in the centre of somewhere, how do people park the car? If you're going on holiday, generally you're going to want to take your car with you. Is that going to work? Again, you're then looking at the area itself. So, you know, we will have a look and see what the area looks like. But no, not really. I mean, each property is different, and every person who goes on holiday has their own idea of what they want to go and stay in. So for something that I'd want to stay in might be somebody's worst nightmare. So it really does just depend on who's wanting to stay there. There's always business there, and again, that's what the holiday letting agent's there for. So they'll be able to guide you know, clients on what's in the area, how the property's meant to look. They will give them ideas of how to improve the property to get most out of the money. Generally, if you've got a bigger house, they tend to kind of say, well, you know, if you put a hot tub in or whatever, that will give you more money. So it's all, I would definitely say that's when you use a letting agent, because they'll know what sells in that area and what needs to be done and how the property needs to be maintained.
That's really interesting. Don't forget, we're going to end in about a minute now. So if anyone does have any other questions, do put them in Ask a Question or in the chat box. I just wanted to ask you, Caroline, about, I think it was something Angus mentioned at the start. One of the advantages of a holiday let is you could stay in it yourself. Is that really okay? You know, could I buy a holiday let and use it myself? But what are the rules around that?
So again, it is lender dependent. Every lender will have their own rules. For ourselves, we are happy for, you know, clients to live and stay in their own property. We kind of expect that's going to happen. The way we look at it is, you know, they'll book it up to full capacity, and then they will stay when there's people not in there. But again, we have had people where they've said, you know, we're going to live in it for 4 months of the year. We can look at that, but we need to factor that into the affordability. So we need to then understand, well, what impact is that going to have on the income that they're going to generate? But as I say, we would generally expect that if you're owning a holiday let, you're not going to be turning business away because you want to stay in it yourself. You would stay in there when it's empty.
Yeah, excellent. That's really interesting. Angus, so a few words sort of for you at the end on holiday lets. What are we seeing from clients at the moment?
We're seeing increased demand certainly this year. Great demand for holiday lets. So the one thing I would add to Caroline's comment about you using your own holiday let, just be aware of some of the HMRC rules on how many days a year you can be in there and how many days a year it should have been let, because it can make a fundamental difference on the tax you're going to pay. So holiday lets can be tax advantageous as long as you run them properly. And as you've already put into the chat, our little blog piece, and that will give you some guidance on it. So by all means use it within, sensibly yourself, but don't fall foul of the rules in terms of what you can and can't do.
Yeah, excellent. Well, thank you very much, Caroline. That was fascinating, so interesting. I learned so much. Really good of you to give up your time. Thanks to everyone on the line today. We will send out the recording as we always do with a bit of an update. And I guess, Angus, we're all poised to see what happens tomorrow with the Bank of England.
Well, I think poised. If you'd asked me a couple of weeks ago, I'd have said it was in the balance of what's going. Given where we are, I think it's almost an inevitability in terms of an increase tomorrow. So I'll be eating my hat if it doesn't go up. So
that's something that we'll show at the next webinar. Thank you all very much. Thanks, Paul, for your comments. Take care, everybody, and we'll be back with you soon.
Yeah, thanks, Caroline. Thanks, Chris. Bye bye.
Thank you.